Gratitude. Today, I am grateful for coffee, especially caramel lattes. It's a fan favorite around the household. Today, I'm grateful for Ivy Beth, my corgi. She's beautiful, amazing. The third gratitude for the day, I'm alive and get to work on my passions. All right, let's do this thing. Gapped up, which was that 2.95%. Let's go to the 1 minute on SPY. Seeing a slight pullback. All right. Oh, my mic wasn't hooked up. Sorry about that. All right, there we go. Should be better now. And what we're doing is trying to map out a 5-minute opening range breakout strategy. So I ordinarily try to trade the Qs, just as a little more volatile than SPY. So we've gapped up 3.46% near that bottom of that gap. Gap up and go, perhaps. So what do we know so far off that first opening 5 minute? We're 5 minutes and 15 seconds into the market at this point. Okay, so for the 504 calls, let's do some analysis on the volume here. Evidence of that gap up can be seen in the percentage of net change in these calls. I'm gonna compare open interest to active volume right now. All right, let's mark out our 5 minute range, 504.18, and we got 507.48 to the upside. All right, so now that we've set our opening 5 minute range, we're either going to break out of this range, come back to retest, and then try it again. So if we're looking for a sell-off, that's what we're gonna be looking for. We're gonna be looking for that breakout and retest structure. So right now we're breaking out of that 5 minute place. Can we come back and retest to the level? Hold there and clearly reject. Then I'd be looking to take the downside. We have come back up to our level, the 504.18 level. That is our opening range. So just for fun here, I want to purchase one put option. We'll just put in a market order. That'll be fine for us. Wait, filled. Now this is a little early. There's no confirmation of the breakout. There's 3 events within the sequence, the breakout. So we've defined our range, then we break to the downside, and then we come back up and retest. And then if we fail that level, then that confirms our setup, the opening range breakout, right? So we're pre-confirmation, but I wanted to get in on one contract just in case we quickly whipsaw or bounce. Let's take a look at volume. From 2.3 million shares in the first 5 minutes to 1 million shares to 1 million to 785, 347. All right, it was a little too early, as I said. Zoom it out here for us. All right, so we've closed 1 minute candle above the opening range breakout. That isn't a good sign for the strategy. I think we've been invalidated in our setup. So let's get out of this contract. And we sold at a price of $1.69. Oof, it's gonna be a huge hit. We've lost $50 on our paper trading account for the day. First trade of the day. I'm not discouraged. It's a valid setup. It works when it works. And when it works well. All right, so it is 7:26. I've done some rearranging for my viewport. It looks a little bit better for me on one trade. We tried to take the retest right here and the retest plan failed, right? So this was the second trade that I was eyeing up. It is now 7:30 a.m. and we have overtaken the bullish hammer of the previous candle. So price is still selling off pretty aggressively here. We're in wait and see mode. Let's take a 90-minute view here and see what has happened this morning. So in the pre-market, we gapped up very aggressively. Trade tensions between the US and China are detrimental to everyone, highlighting the need for a solid trade deal. All right, we sell all the way back down to 502.60. This is where we try to initiate our bounce back up to 505.30 level. And then we oscillate and we come back up to the 505.30 level and sell off from there, which leads us to where we are now at $502 on the NASDAQ, 10:36 a.m. So there are a few trade ideas, I guess, initially. If we were to pop back up to 505.30 level pretty quickly, I would say that is a spot to look for a rejection, right? We've seen 2 rejections there. Third rejection could be probable. The second option, second trade idea, we could go longs, we could go calls, because you could say to yourself, hey, we just had this huge, pretty big sell-off, but I would counter and say, yeah, but there's no confirmation. So you would want to see a positive trend, a positive movement. And mind you, we're only looking at the 1 minute, so let's take it out at the 5 minute. what is the trend? That trend is obviously bearish, not bullish. We gapped up major in the overnight session, but ever since the markets opened this morning, we've just been selling off. So I think we're honestly just sitting in a no man's land. Can't really take a trade. Our first trade of the day failed, which resulted in a loss of $50 on a paper trading account worth $1,063. So we're down to $1,000. We took one trade. All right, so if we're in that sit tight and observe structure mindset, I'm asking myself and talking to the audience, what is that level we're waiting for? What do we want to see in the future? And honestly, if we keep buying back up and if buying pressure starts to look, a little weak around 505.30, it could be a spot to take a short position. That could be the fourth option after we wait and see for a while today. Oh, Ivy, you're just so cute. I gotta get this video of my dog right now. How you doing, girl? Ivy is just chilling. Those 503 contracts are quite popular, so we're gonna go in with either 1 or 3. What's interesting is those 501 puts have actually gone positive on the day. So we're positive 17%. Our 503 puts are still negative 90% on the day. The day before they were $15. But that doesn't mean much for us, because we're just playing intraday volatility. So we've seen value compression on these options. We've seen the premium drop significantly, and I'm just waiting for that time to strike. All right, so here we are. We're coming up to our first zone. I'm gonna take a bite. I'm gonna purchase 3 contracts right now. And one thing you always wanna look out for is make sure that all of your graphs are linked up properly. So we have the 503 put here. We just wanna make sure to copy the 503 put over to our execution window. Or we can go over here to the options chain and choose the 503 put. Yep, all right, and then let's go for 3 right now. So we're in to purchase 3 contracts at a limit of $1.22. We want to try a limit order this time. All right, we're close to our fill, our limit price of $1.22. We're just 3 cents off at $1.25 right now. 13 seconds left on this 1-minute candle. With decay of these contracts, we know that if we just consolidate up at this level for a while, then it's gonna come down to my price eventually. All right, let's cancel our order. It's just been holding on us for too long. Bring up our first few indicators for the day. A VWAP, that'll be important, volume weighted average price. So we're underneath VWAP, which is a bearish sign. All right, so let's check it out. Let's check our Greeks out on our 503 put. Theta of $1.26, we're at $1.26, so that means that's gonna expire worthless by the end of the day. There are the volume on these contracts is 47,000. I wanna try for a retest here. This looks like a great spot, so let's go in and go for 3 contracts. All right, so we're in at $1.15 per contract. We're trading a little bit later now today, so the premiums are not as expensive juiced as they were this morning. Let's go on the 5-minute. There we go, like to see it. Up 7.83% on our contracts. 6.96, 11%, just past 25% mark. I'm gonna scalp and take 1 off the top. There we go, we're gonna sell 1 contract at a price of $1.46. So we've locked in $30 or $29 of profit on this trade so far. This is gonna help protect us in case there is a slight pullback. We're seeing volume really weaken, which is a good sign for us. And once we start to form that lower low pattern consistently, then I'll feel even more confident in this continued push to the downside. There we go, that's the rejection I was looking for. Sellers are saying, no, we don't wanna go up there. Man, still seeing buyers hold. I think we were looking good, but not much anymore. So we're back essentially near our break even. Our other 2 contracts are at a price of $1.15. On a next push down, I think I wanna get out of this position. All right, and we're gonna get out of this trade right here. This is a good push down. Cool. All right, so at the end of the day, that is the trade that I took. And I'd say this was the most successful trade of the day. First, purchasing our 3 put contracts at a cost basis of $1.15 at 10.53, selling out of our first contract 5 minutes later, and then waiting another 7 minutes. All right, so putting it all together, we're seeing a decrease generally in volume throughout the day. We saw this reclaim of VWAP fail, and we're seeing this bear flag develop right now on the 5 minute. So these support a downside continuation thesis for a potential trade. Now, the question you have to ask yourself, where is the entry and where is the exit? Or are we just in no man's land where we aren't taking any positions? And generally in trading, it is a wait and see game, right? You're waiting for that correct risk to reward ratio to hit. You don't want to just enter anywhere willy-nilly. If someone online is preaching an 80, 90% win rate, you just have to really heavily scrutinize that because, well, professional, on the trading desk traders, they're looking for just tiny edge. Jim Simons, legendary quant investor. I know it's a little bit different from day trading, but Jim Simons was the legendary quant investor that ran the Medallion Fund. And even he had a win rate of around 51, 52%. So anyone preaching a 90% win rate, it's like nobody knows what's going on. You're just guessing at probabilities, taking decisive action, and then ensuring your system retains profits in the long run. And if you become a good loser, then your wins can slowly compound. And one last thing, this isn't a trend day. This is a failed VWAP reclaim and some consolidation. It's been kind of shaky. Whereas if we go back, let's go back a few days to an example of a kind of clear trending day. So pretty clear trending day, you can see over here on May 5th, we had a pretty clear, uptrend. Wasn't the biggest uptrend, but and now today it's just not present. All right, so what do? Well, we don't want to sit in front of the screen all day, so we'll set an alert, create an alert at 5:01:50 below, and then we're gonna create an alert at 5:04:42. There we go. Cool, so those alerts have been set. All right, awesome. Here are our alerts. We can also set alerts for specific volume if we're seeing an increase in volume. If maybe in the future you identify, oh, I'd really love to hop back in the action if there's a 1 minute candle that has more than 200,000 shares exchanged. That could be an indicator that people are getting interested in trading again for the day. We can put an alert on for news. We can put an alert on for technical indicator, MA, okay? So exponential moving average, 1 minute. When does value go 1 cent below the 20 period 1 minute moving average, exponential moving average? Great, so let's look at the EMA. We're gonna go for an EMA 20, just a little kind of green line here. Yeah, I don't know, just playing around. I don't really need an EMA today. So let's go back to alerts. Yeah, let's get rid of that we just created on accident. Get rid of the EMA alert, delete, save. And especially with options, if you're in no man's land, from my experience, if I'm ever in no man's land and I try to trade an option, the value, the premium, it just never moves in my favor. And in fact, it's just really hard to squeeze juice out of that lemon. Boiling down, of course, like the mathematical parameters are not in your favor when we're in a situation like this. When we are in a trending direction, when VIX is in our favor, there are multiple factors. So we set our alerts for the day, we're good to leave the screens and get on with our work day.